Welcome to the new weekly outlook, everybody. As always, let's go ahead and start off with the fundamentals first and then move on to the technical side with Stefanos.
What's up, guys? Hope you had a great weekend. Let's dive into a new week. We got a lot of economic data coming in that Sharma's going to break down for you. So, ready for
Absolutely.
an exciting week.
So this weekend was also quite exciting when it came down to fundamentals, especially if you have been following what's happening in the UK. So last week we got the sentiment that we were going to get a new prime minister, and then also the fact that is Boris Johnson going to come back, and who's going to be the next prime minister, and we're supposed to find that out by Friday. But over the weekend we have Boris Johnson kind of quitting the race, and then right after that, as soon as that news came out, we had Sunak's competitor also quitting the race, and so now it really just leaves him into the race, right? And Friday we're supposed to find out like who was, this upcoming Friday, who was going to be the new prime minister. But clearly, he's formally going to become the prime minister on Tuesday. So tomorrow, following a meeting with King Charles Downing Street, and that's essentially what the markets are starting to price in now. So there was a difference of obviously the policies that they were all going to come in with. And so when you look at after Boris Johnson was, he quit the race, now what we're looking at, or what the market was pricing in yesterday, right when the market opened up and there was a massive gap and everything that happened for many of the yen pairs as well, and the GBP pairs too, was that on one side you have Sunak, who's more on a little bit of the conservative side, because obviously he was the chancellor before he started running for the prime minister position here, so he understands what's kind of happening and what needs to happen from a fiscal and monetary policies perspective, right? And then on the other hand, you had, I forgot her name, but you had his opponent right here, and she was going to do pretty much exactly what Truss was doing, which is, she was going to work on cutting those taxes. She was going to work on those economic growth plans, quote unquote. But obviously, when Truss came in with that in the office about 46 days ago, before she resigned, obviously the sentiment there was that this was not going to work, and we saw that it was not working because the central bank had a completely different view and a completely different objective versus what was Truss trying to accomplish. And so now bringing in another candidate who's just going to forward something like that was pretty much off the table. It's like, that everyone knows that's not going to work, and so you need someone now who's going to work with the central bank. And now when the new chancellor came in as well after the previous one was fired, he met up with Governor Bailey, and Governor Bailey and him came to an agreement what needs to happen. So we saw like some sort of uniformity there between those two. And now we need the same exact thing happening from the prime minister perspective too, who understands that right now, yes, you're sitting in high inflation levels, and of course you're sitting like an overinflated economy, quote unquote. But in order to control that, you cannot move right into a growth economy. That recession needs to happen. The most important thing now is, how do you control that recession so it doesn't turn into a depression, right? And so that it's not a long recession either, where it's lasting out for like 5 to 6 years to even 8 years, right? It's not as long as what happened back in like 2007, 2008. So that is what's going to bring in the optimism. That's what's really going to drive the sentiment of businesses and consumers here, depending on how fast can you really control this recession. When we had the previous prime minister, we also had not Boris Johnson, but we had Governor Bailey coming out and saying that it was going to be a long recession. And that also partly came from the fact that even though the central bank and the government are completely independent of each other, the central bank has to follow and kind of keep an eye on what is the government doing, because if the government continues coming out with these policies that are just injecting money into the economy, the central bank has pretty much played cleanup here, right? They have to come in even more aggressive than they were planning on doing in order to contract that liquidity that's being provided into the markets. And so yes, they're completely independent of each other, they make their own decisions, but they're still indirectly affected by each other too. And so if you can get, the central bank and the the government working together, then that's when you have, a better outlook of the economy, because both of them have the same objectives. So
Mhm.
that's what the next steps here for this is going to be for the prime minister, and what is essentially what are the policies that he's going to be coming in with, and can he continue the same path and same objectives as the central bank.
Absolutely.
So upcoming London session is going to be very important. Another thing before we dive right into the economic calendar is on Friday, we had discussions about whether or not Bank of Japan was intervening into the markets, and they said that they would if the yen continued dropping. And so right before the market closed out, we all saw like those massive volatilities in the market. And I'm sure like a lot of people were trying to catch some trades and stuff. The most important thing to understand there was all of that was pure market sentiment, right? There was no actual proof of Bank of Japan actually intervening into the markets. They started to see some yen strengthening a little bit, right? But again, that's after a massive fall that has been happening with the yen. So there was no actual confirmation, any statement or anything that was being provided that said that Bank of Japan had intervened. But because of that little minor strength, that's when the investors thought that Bank of Japan has already intervened, and they try to counter that. And that's why you start to see that volatility into the markets. And then obviously following that over the weekend, that's when we started to see, right when the market opened up yesterday, that those massive gaps. So that's another thing to consider and keep in mind. Now, going into this week, we have started off with Chinese GDP coming out on Sunday, and then today really kickstarted the week when it came to PMI data. So there's flash manufacturing and services PMI, and then you have the final. The flash tends to have the most impact because it comes out first. So when we're looking at the data here, clearly we're starting to see the manufacturing and services side starting to drop down now, right? And same thing for the US here, and same thing for Europe and Germany especially. So that's what we really want to be paying attention to, because Germany is the biggest economy of the Eurozone. Now, this data point here is starting to support the weak economy that we are looking at. And then continuing down into tomorrow, we have consumer confidence coming out. They're expecting that to decrease. Can we potentially see maybe a lower number coming out? And all of these are indications of the economy, again, contracting and correcting. Now, going into Wednesday, that's really when things to calm down a little bit into the New York session. Unless you're trading the Canadian dollar, then you have interest rates coming out. But this is another kickstart of interest rates. So starts off with Bank of Canada. Going into Thursday, you have interest rates coming out from Europe, and then an Asian session from Bank of Japan, which we know that they're going to maintain the negative interest rates. There has been no shift of sentiment from their central bank. But when you're looking at Europe, they are expecting to increase by 75 basis point hike. So they're still taking the aggressive approach like any other central bank. And then on Thursday, you also have the advanced GDP coming out from the US. Continued down into Friday, we got PCE, core PCE coming out. And this week is going to be very important because it sets up for next week. And next week is, first of all, interest rates week, but it's also the first week of a month. So you also have NFP coming out. So you're going to have a ton of employment data coming out, labor market data coming out. And then on Wednesday, you have interest rates coming out, along with ADP non-farm, and then finally leading into Friday, you got NFP coming out. So this week and next week is going to be very important when it comes to economic data. And then also next week, you're going to see the economic plan coming out from the UK as well. So this week and next week, a ton happening fundamentally. So it's just best to be patient when you're looking for these trade opportunities, and you don't want to be just jumping into impulse trades and trading in sessions or middle sessions that you normally wouldn't trade. It's all your stuff. Go for it.
100%. And if any of those economic data points either confuse you or you don't know what they are yet, just go into that calendar and you'll see a little folder where you can open that up and just dive into each one and try to figure out what each of them is. And if you have more trouble with that, you can reach out to Sharma, you can reach out to one of us, and we'll happily explain it to you. But looking over here at the at GJ over here, I have the higher time frame levels marked off over here. Some of those whole numbers, 170, I got 168, 166 over here. But the basis of GJ here is extremely bullish, right? Very weak Japanese yen. That's really what's pushing this pair. If you look at GU, a pair like GU with a very strong dollar, the thing is tanking right now because Great Britain is in a terrible economy and they're headed right for a recession, if not already being in one, depending on your definition for them. So looking at the monthly here, extremely bullish, right? We ended up, if you look at the weekly, The weekly ended up pushing up and then tapping into that 170 level and then rejecting 168. If you guys remember last week, 168 was a critical level where price just kept teetering above and below, couldn't figure out how it was going to close. And then on Friday, you had that news of intervention from the Bank of Japan, which ended up having us flip bearish and close bearish below that level. Right. But today, so far, to open up the week and yesterday as well, we created that bottom wick flip bullish. And right now, we're kind of like a doji candle sitting right above 168. So if you look at the daily, again, you got 168 as that critical level right here. We're going to end up adjusting this, but we've been holding that resistance for many months, right? So we ended up finally breaking above. We come down, retest it, hold support with this bullish candle right here. Then we end up faking it out and closing below it, right, with this bearish candle. And then this candle ends up flipping bullish. And it looked like we were faking out that level, but now we just close like a doji bearish candle. So obviously we're kind of consolidating all in this area right here. So we get to see if there's anything worth scalping, or if we just want to kind of wait and see what ends up happening once we break out of some of these lower time frame ranges. Looking at the 4 hour now you can start to see what's going on. You can see the consolidation. You can see that break above 168 over here. And then we ended up holding support somewhere around here. So what I'm going to do is I'm just going to lower this down here. We're going to keep 168 marked off because it's a psychological level. But right now we're holding a strong support right here. Ended up breaking below and then faking it out, closing back above with this candle, and then tapping in to that level up here, 169,500. Somewhere in this area, we've been holding a strong resistance as well. So we ended up rejecting that level this morning and coming back down to 167,500 and holding a support so far. So are we going to hold that support and continue to drive up like we did over here to the left? Right? Or are we, and right over here as well, you get that fake out. But right over here, are we going to continue up, or are we going to break through this support and maybe continue down to 166?
If I may add, from a fundamental perspective, or first of all, from a technical perspective, you're setting at these high levels, right? Monthly, weekly, daily high levels. Even on the 4 hour, you're starting to see consolidation. Now, when price breaks out of this, this is where you need those fundamentals to kick in. This is going to move when tomorrow Sunak has been, he's the prime minister officially. And then, what does he say about what are the things that he is going to do with the economy as a new prime minister? What is his vision like for the UK? So that's going to be very important because that's really what's going to help push this past. But again, going into next week, you do have GBP interest rates also coming out. So there's a very high chance that price is going to try to fake out of these areas, tomorrow, or maybe even push back up a little bit higher, to maintain the bullish structure. But after that, a lot of it is going to be to see if he's in line with what the central bank is doing.
100%. All right, so looking at the 1 hour over here, again, we're holding that support. We ended up getting a strong bullish 1 hour candle, but we haven't cleared these wicks yet. So I'm just going to mark off a little resistance right here. Was a previous support in the past around 168,200. We need to clear out of that level to see if we're going to end up driving up, mirroring some of these moves, maybe correcting some of the move down from this morning. If you look at the 30-minute, yeah, it looks like we're trying to tap into this area, but you need to wait for that close above, right? This is not enough for you to be taking any kind of buys at a resistance. You want to wait for that close above, but at the same time, do you want to be trading in here? Guys, you want to be patient when it comes to ranges like this. I'm not saying not to play them, but just make sure you're lowering your risk when trading these and not trading the middle of the range. Wait for price to break it off the resistance, or break off that support, and wait for certain levels to be broken before you take anything up. I would just end up probably adjusting this right up here, get that resistance. And if you want to mark that one off too, you can, because you got that clean move up, and then we keep rejecting that level on the 30-minute. I don't think there's anything special that you'd be taking in here, depending on how big the range is. It's only about 30 pips, which is a big enough range to scalp in, but on GJ that hasn't been that big of a range, 32 pips, right? We've been looking for, more ranges like that, or if we can come down and break this support down here and clear this whole area Over here, you got a fairly clean move over here to the left. You can fill some of that gap, but continuing back down to 166 would be a big deal. All right. So looking over here at gold, gold on the monthly is a little bit weaker of a candle right now, right? We've had some very strong consecutive monthly bearish candles, about 7 as of so far. The current one respected the high, I believe, of the previous monthly candle over here, ended up flipping bearish and then retesting this level down here. Didn't necessarily fill that wick, but we retested this level and we ended up bouncing off of that 16-15 area. And right now we're sitting right around this area. I know we're kind of consolidating on the lower time frame, so let's take a look. All right, so looking at what ended up happening over here, we ended up creating a new low. And as we know, whenever we create a new low on gold, we end up coming back up most of the time to the previous support to hold a resistance, right? So we ended up holding that resistance right in here, breaking down, retesting the low down here, filling this area over here and kind of tapping into that wick. But then the most important thing is we ended up flipping bullish and holding support right here, right? This candle so far has created a top wick and flipped bearish. So can we continue down from here? Or are we going to continue to hold the support, drive up a little bit more, and then drive down? Looking at the daily. All right, so today our daily candle ended up closing bearish, right? We've been holding support down here. You could draw it like that if you'd like. Major support down here at 16-15, almost created like a higher low over here. And could we get a harder pullback from here? And can this be like some kind of a double bottom before price continues down? Maybe something, and it didn't pull down farther than this wick right here. Came down, and that's your wick right there. So it's a little bit higher than the previous low over here. And we could very well drive up into any of these areas, maybe into here, this key area right there, and then continue down, right? But right now we are rejecting that previous support that we held once we broke below 1680, right here. We held that support, we faked it out over here, held it again, broke through it, held the resistance at that level, came right back up to retest it, and now we're rejecting again. So we got that bearish close. Can this candle create a top wick, flip bearish past the low, and continue down? That could happen too. Looking at the 4 hour now. Now we're kind of sitting in a range here. You have a low that was just created after bouncing off that area. Looks like these candles are pretty weak, and you actually just got a bearish candle close right there. So are we trying to hold a support or a resistance in here to drive down and mirror these areas to the left? Because you could still see the bearish pressure of price trying to continue to create lower highs over here, especially with that candle close right there. So my question is, can we continue down from there with a clean move? 1 hour. Now what you have is I'm going to clean that up, get that resistance, get our current range, most important, mark that off. This you could drag over to the left, definitely a previous support. And once you break this support right here, you got a clean move coming down. You'll see it on the 30-minute too. Draw that here. So this is your no trade range. This is a clean range. You could very well hold a runner coming into here, right? Do you want to take buys up here? Maybe. I would definitely be waiting for a retest in this area. Wait for that support to hold, and you could take this thing up to 1660 with enough range. You get about 100 pips in here. So you could very well take this thing up. But you're really playing with fire, trying to buy gold right now anywhere in this area. And then also even in this area, I think you'll have safer buys above here, especially with these multiple rejections over here. So if you're going to take a buy in here, definitely wait for that retest to take this thing up. But this might be safer buys. And even above there, it starts to get a little choppy up here, right? You start to come into this area. That's your next range. 1668. Flat, I would say, where price could come back up into the area. Certainly fill that wick as well, but that might be safer buys for you. All right. So that's what I'm looking at over here on both pairs. Sharma, do you have anything to add on gold?
Not specifically just for gold, but for both of the pairs or any other pairs that you guys are looking at, even like, for example, US 30, which we're not going to break down here, but we'll go over it in our live session this week. But for whatever pair that you guys are looking at, make sure to watch the price action key here, the little clues that price action is leaving. We've gone over this multiple times in our simulation sessions, and they're on YouTube for you guys to go check out. But here, for example, on the 30-minute time frame within that consolidation, there's clearly higher lows that are being formed, right? We're not breaking those previous highs though. So, you are definitely sitting in a strong resistance, but look at the clues and align that up with fundamentals. So obviously we know that recessions, make a great opportunity for a lot of investors to buy up equities and also just make a lot of great investments. But before you even get there, obviously price is tapping into, when you go into the daily time frame, weekly or monthly time frame for gold or GJ or anything, clearly you're tapping into liquidity areas. So you have to wait for that alignment from a fundamental perspective. Of course, I do think gold is going to continue pushing down in the next couple of upcoming months or even upcoming years or so, as we do start to move into economic growth. But I do think that we have one last push to do before we can continue just melting back down. And that push could come from the fundamentals with the economies, going back into a recession, the global recession that's going to be happening, which the IMF said that they are predicting that to happen. And then the most important thing is now which country and which economy can come out of the recession the fastest, and making sure that it doesn't lag out for like years like last time.
100%. Yeah, all about patience, guys. You just want to wait for some of this data to come out later in the week, as Sharma was saying, and just stay patient. Wait for your setups. Don't try to force anything, especially in the ranges that we're sitting in right now on both of those pairs alone. But a lot of things that the market's waiting for. So sit back tight and hold on to your seat.
Absolutely. So we'll go ahead and post under the community tab of when we want to do the live session. Did you want to do it for the PCE on Friday, actually?
Yeah, we can do that.
Okay, so
If
we'll
you've got
go
a
ahead
rate
and we'll do the live session on Friday then for PCE price index, but I'll also post that under the community tab for you guys to, take a look at. Other than that, make sure you guys are trading safe this week and make sure that you're not just jumping into trades without the proper confirmation, especially when you're in this 15-minute prior to the news release and 15 minutes after the news release. That's where you're going to see the most volatility, especially with these red folders. As
100%.
always, if you guys have any questions, reach out to us on Instagram. Mine is at SharmaFX. Stefanos is at StefanosFX.
Absolutely, guys. Have a great rest of your week.